Toyota has just reported its earnings and revenue. And, well, it's down by 40% compared to what analysts expected. In fact, this is a company that just said it is scrambling to figure out what it will do. In January, it will make a decision on whether or not it starts developing a new EV platform because its current EV platform is prohibitively expensive. It just made a loss in the US car market for the first time in history. And it has cut its sales delivery numbers this year by 700,000. My friends, this is the beginning of the end of the world's greatest motor company. Hello, my friends. Welcome to the channel. Great to see you. My name's Sam Evans and I'm coming to you from Melbourne in Australia, and I'm the Electric Viking. Today is a historic moment. Today is the day when we will look back and say, that day was when Toyota had its Nokia moment. Or maybe, you know what? Maybe it's Kodak moment. Maybe that's the better way to put it, right? Is that Toyota? Nope. That, my friends, is Toyota. Need I remind you, Toyota has more debt than any other company in the world. And in fact, it's not even close. Yes, Volkswagen technically is in second place, only about 20 or 30 billion behind. But the truth is, much of Volkswagen's debt is finance debt. Only a very, very small percentage of Toyota's debt is finance debt. What does that mean? Pretty much all of Toyota's debt is legitimate debt. If this continues to happen, guess what? They won't be able to pay back their debt. If you're a bank right now, Toyota comes to you and says, we need some more money, what are you going to be thinking? This is a good investment. Sure, let's invest in Kodak right when digital cameras and smartphones came along. Brilliant idea. Well, Toyota has admitted, right, that it is considering a reboot of its electric car strategy to better compete in a booming market that it has been slow to enter. It's announced within the last couple of months. Instead of spending $1.3 billion on its electric car facilities in the US, it's going to triple that investment. Now, people are saying, oh, isn't this wonderful? This is amazing. Yeah, it's great. The only thing is, they don't even have a car platform that they're going to build in that new factory. It certainly won't be the platform that they use to build the bZ4X. Why? Because that platform, Toyota has admitted, is prohibitively expensive and they cannot manufacture that vehicle at scale and make a profit. So the thing is, by the time Toyota actually build the factory that's going to make their EVs in the United States, well, that's going to be years away. What's going to happen between then and now? They're going to continue making losses in the US. And they're going to continue doing what they said today that they plan on doing. What do they say today? That no one is reporting on. I can't find it anywhere other than in the actual conference call, which I found on Seeking Alpha of all places. They said, we're going to raise prices in the US. Brilliant strategy, Toyota. How's that going to work for you? Customers in the US, right? They're moving to electric cars. How do we know that? Well, the car market in the US that sets the trend for what people in the US do, whether you like it or not, it's true, is California. What percentage of cars in California are EVs? 18%. What was it last month? 22%. What's it going to be this time next year? Who knows? Could be 30%. Toyota's going to raise its non-existent prices of Toyota's going to raise the prices of its cars. It sells basically no EVs in the US. So basically people are going to say, okay, we could buy an electric car, or we could buy a Toyota which now has had its price raised a number of times over the past 12 months. What are we going to do? Yeah, you can see how that's going to go for them. Now the thing is, this is actually worse than it sounds. Toyota's plan to sell millions of hydrogen-powered cars, well, it's pretty much dead in the water. I mean, realistically, the US car market is the most important car market for Toyota. Second is probably China. They're losing market share drastically in China because they don't really sell any EVs. The ones that they do sell, well, they're okay. But I mean, they just brought out the bZ4X in China about a week ago. Everyone else has been selling their EVs for years. And the Toyota Corolla is actually pretty much made by BYD and another car company, which is a joint venture with Toyota. So it's a tri-venture. In other words, Toyota own about 33% of that tri-venture. They're not going to get a lot of revenue out of that. But getting back to their hydrogen car sales, Toyota had this grand plan. They were going to sell millions of hydrogen vehicles, and clearly the US market was a big part of that strategy. But the thing is, in the third quarter of 2022, only 150 hydrogen-powered cars were sold over the entire 3 months from, well, every manufacturer that exists in the US. That means only 50 were sold per month, but they weren't even all to Toyota. That's a combination of 50 per month to Hyundai and Toyota. Now, it's safe to say hydrogen-powered vehicles just died in the US. And if you bought one, I do genuinely feel sorry for you, because the resale value of those things is they're worth pretty much nothing on the secondhand market. One of the key reasons they're worth nothing, if you don't already know this, Toyota and Hyundai, they give you an incentive. They give you free hydrogen fuel for the first 3 years. That's why people dump them after 3 years. Because after that, you've got to start paying for the stuff. And it's not cheap. There's not many places you can get it either. Now, Toyota's operating profit actually fell to $562.7 billion. That's a 32% year-on-year decrease. Last year was the COVID year. This year's meant to be the revival from COVID. And yet, Toyota's profit is down 32%. So what's the reason for this? Well, Toyota said the profit decline is due to soaring materials prices and one-time costs despite the positive effect of the depreciation of the yen. So there you go. This is much worse than it looks. In fact, if you factor in the reality, which is that Toyota is making way more profit than it would have as a result of the massive depreciation of the yen, Toyota's profit is down way more than 32%. Toyota actually made a profit of $2.9 billion on the sales of over 2 million vehicles during the quarter. What that means is Tesla made nearly double the profit, selling about 1/8 the number of cars. That's a bit alarming. What does that mean? Toyota's profit per car is very low right now. How do we know their profit is very, very low? Well, their quarterly sales grew 22% to 9.2 trillion yen, or 63 billion, from 7.5 trillion a year earlier, when they, interestingly, made more profit. So they had 22% more sales and made 35% less money on those sales. It's hard to fathom how that's even possible, considering the depreciation of the yen. Why do I keep talking about the depreciation of the yen? Well, the Washington Post says this: during the first half of the April to March fiscal year, the favorable effects of the depreciating yen added 565 billion yen, or $4 billion to Toyota's bottom line. That's what Toyota said themselves, in fact, not just the Washington Post. They were just paraphrasing what Toyota said. So Toyota has attributed 50% of its profits this year to a depreciating yen. A weak yen lifts the earnings of Japanese exporters like Toyota by boosting the value of its overseas earnings when they're converted into the yen. The US dollar was trading at about 110 a year ago. Now it's at more than 150 yen. So whilst Toyota sold 2.6 million vehicles around the world in the last quarter, up from 2.5 million vehicles in the same period last year, they made far less money per vehicle sold. In fact, about 50% less. I bet you'll find none of the mainstream media will report on this fact. If you extrapolate what Toyota said only a few months ago, that means that more than 50% of the money it made selling the 2.6 million cars it sold in the last quarter, purely came from the depreciation of the yen. That means Toyota made less than $1.5 billion over the quarter. If we face the reality of what's about to happen to Toyota, if we face the true reality of what's about to happen to Toyota, then things look much, much worse. Toyota say that by 2030, only 30% of its vehicles sold worldwide will be electric. Only 30%. Now, if Toyota's sales were to go down by 50%, there is no way it would be possibly capable of servicing its debt burdens. So what will happen? Well, the Japanese government will have no choice but to bail them out. The only question is, how long can they do that for? Remember, This is the most indebted company in the world. They have more than 220 billion US dollars of debt. You might be thinking, Toyota can just sell off some of its assets, right? I mean, it's got heaps of assets. In fact, its assets are worth more than, apparently they're worth more than 300 billion. If you really believe that, have a look back what Toyota sold its factory to Tesla for in Fremont. It was about 1/20th of the cost that it took to build the factory. What do you really think those assets are worth, especially in a market being disrupted by electric cars? Those factories are set up to build what? Gasoline-powered cars. And that, my friends, is a completely different product. Toyota will find this out very soon. In fact, I think they already have. Let me know your thoughts in the comment section below. Have a great day.